Hello traders, Gary Wagner here. It is 12:30 in Honolulu, 6:30 in New York on Friday. Happy Aloha Friday, as we say on the islands. It is the 13th day of September 2024, and this is the evening report for gold and silver, our weekend review. What a week for the precious metals. Absolutely, history was made over this week, with gold trading to a new historical all-time record high and closing price. Today, gold gained $19. This bases the most active December contract after trading to a high of $2,614.60. December gold is currently at $2,606.20. If that wasn't impressive enough, I've converted our daily to a weekly candlestick chart. This week, gold gained $79.40. That's a net gain of 3.14%. Truly a historic week for gold. Not to be outshined, silver's performance was stellar, with today's gain of 85 cents, a 2.81% rise. December silver is now at $31.06. Yesterday, silver gained over 4%, and the prior day, approximately 1%. If you recall from the beginning of the week, on Monday, we identified a simple two-day pattern called a piercing line, which can provide traders with insight of an imminent bullish key reversal. However, to take that pattern and act upon it requires a confirming candle on the next session in trading. We look for a large green candle with a higher low and a higher high than the previous one. However, on the following day, Tuesday, the confirming candle was tepid at best, while silver traded to a higher low and a higher high. The body size was a doji rather than a large green candle, but we did get a full confirming signal on Wednesday of this week when we acknowledged that it would be safe to initiate long positions. Our resident silver technical analyst, Joseph Wagner, will fill in where he believes silver could head on this leg of the rally when we pull up our technical studies. Considering the size of recent moves in both gold and silver, although the dollar provided minor tailwinds, the vast majority of rising prices can be directly attributed to traders bidding both gold and silver prices higher. Today, the dollar declined by 0.37%, taking the index to 100.748. If the dollar continues to fall, it will be interesting to see if it breaks below 99.50, what we are labeling as a major level of support, because if that happens, we could easily see a further decline, possibly as deep as 96, which would be a decline of another 3%. Acknowledging that this week was truly an historical week for gold prices, taking it above $2,600 for the first time in history. What does that do to my current forecast and projections for gold this year and the first quarter of next year? I am on record believing that gold will hit $2,700 per ounce, but I was under the assumption that that would occur by the end of the first quarter of next year. The fact that we have seen gold rise almost $80 this week alone and break above $2,583, the one-to-one relationship between primary wave 1 and 3, I believe that if gold continues to rise, it will go at least to $2,625. That is a 1.23% extension, and as high as $2,650 before initiating a fourth wave correction. Because wave 2 was such a deep correction, Elliott wave modeling forecasts that of the two corrective waves, waves 2 and 4, one will be rather deep, a minimum correction of 61.8%, and the other of the corrective waves would be a shallow correction, either a 23 or 38% retracement. Therefore, I would look for the upcoming correction, wave 4, to be shallow, since wave 2 was so deep. And while I believe that gold will hit $2,700, I now believe that that will occur before the end of this calendar year.
This week, silver started to act like its usual self, moving up in tandem with gold, but to a greater degree. Silver gained almost 10% in value this week alone, and it ended the week at a very predictable spot, closing out at the 23% retracement of our entire 5-wave cycle that was completed in May. The closing price on the week, $31.06, is represented by the 23.6% Fibonacci retracement of the entire rally that began in February and ended in May. This price point was historically significant. It was resistance in April, and it was support in May and in July. Now we are right there at the last technical resistance level before we have a crack at the recent highs around 3350. As you guys know, wave counts are fractals, and each wave can be subdivided. I'm going to pencil in our larger degree wave count, 1 degree up above our primary cycle, which is just called a cycle. And we got a termination of our correction at the 61.8% retracement and a bounce from there. That is a very bullish sign that the market is on its way to new highs. Put in our lower degree wave count. We are also in our third wave. The third wave that we are currently in must go at least until 3173 to be a 1-to-1 relationship to wave 1. More likely, it will trade as high as $32.60 and possibly as high as $34. So our wave 3 could end up looking like this. Now this is really exciting because for the first time in approximately 11 years, silver has a chance of cracking into the zone above $35. And to put that into perspective, let's change this over to a weekly candlestick chart, and let's change our Elliott waves from a primary cycle to a cycle. Remember, we are in our third wave of our cycle as well as our intermediate cycle. This third wave has the potential to trade as high as $43.44. That be matching up with these tops that came in December 2011 and February 2012. Once again, that's our long-term picture, and our short-term picture is looking just as bullish. We are in our third wave, and this wave should not terminate here. We should continue to see higher pricing into next week as we attempt to break above essentially a triple top spanning over 11 years. But before we make highs of the decade, we still have to trade above this triple top around 3350, and we have potential to do that in our current wave or our last 5th wave of this current wave count.
This has been Gary Wagner
and Joseph Wagner,
wishing you as always good trading. We will talk to you next week for Fed Week.